going to put on this mask, but I figured it would mess up my hair. Not that my hair couldn't use some messing up, because it's Halloween, and we try to keep this light. So here's the mask that I stole from my 11-year-old son, but it didn't make it on the head this time. Okay, we're going right down to the post in the essence of time. This is a kind of long post. First of all, and more importantly, what I want to show you is our new addition to the firm, and that is Nathan, Elliott, Capone. Capone table of 5. I pick on them, but congratulations to them. 3 boys. Good luck, Randy. It's all good. Second of all, break in our holiday party. We've got a great RSVP list so far, and we want to remind everybody you are more than welcome to bring a friend if you want as well. It's at DAC, and so it'll be a lot of fun. We hope to see you there. Okay, let's get to the post. Required minimum distribution season is upon us, and I go in here, this post, those of you that are listening, this link goes into great detail, but here are the 6 major items that we do for RMDs. We're going through and doing RMDs right now. We should have them finished before the end of the month. You guys will get a kick out of this. They're working on the building, and I'm hustling to finish this before they start making loud noises. The next, I may or may not win. The next financial planning update is a Social Security cost of living bump. It was 2.8%. I went back and actually made this chart. This should also go into folks that have pensions that are tied to the consumer price index. So we got a 2.8% increase. All right, now on to the capital markets comments. Suddenly it's raining. What happened? I liken this. I put a lot of thought into this. This is the first time I've run through this, so look for it some more. What gives? Oddly, capital markets are kind of at times like the emotions of everything gets together. And I liken it maybe badly to a car accident, and not in that it's a car accident, but that it takes multiple things to have a car accident. So I go through our key points that we think maybe started this. And first point is, again, this is fresh off of our minds and what we're trying to bring across here. There were some trendy high-flying stocks, notably they're called FANG, that were followed, and they really haven't let up. And suddenly they did let up, and leading to point 2, you'll know why it's important. A lot of managers were in these funds, and point 2, in these stocks, point 2, a lot of these managers are very near the end of their year. So it was like a musical chair. One guy said, "Oh, I'm going to leave," and then everybody was forced to leave. So point 2, no, and by the way, no one knows what's going on with 100% certainty of the capital markets, because it's a collective investments of many, many people. So point 2 is it's near the end of the year. For those, I didn't clarify this, 10/31 is end of the year for most asset managers. And so they wrap up their books. And so if you had something happen right at 10/20 or early October, you don't have much time to let up. And that's why a lot of times we have the October blues. October has lived up to its name. Third, we have the midterm elections. They're closer now. Again, none of this in a silo maybe created this, but when you start putting all of this together, then people start bouncing around a little bit. The fourth, interest rate increases. At a point in time, interest rates do create problems. We've talked about this many, many times. We don't want an inverted yield curve. Are we there yet? We're very far from it, but it could be another thing. And then fifth, tariff talk. Actually, the funny part about this is the tariff talk is actually getting better. It's very well known that China and the United States are going back and forth. They're coming together on a lot of things. It is getting better. So again, I don't know. We don't know exactly what caused these things. These are our best estimates in order of priority. However, our good friends at JP Morgan gives us a kind of in closing for the month. They give us it's a good refresher. I mean, markets do come down 5-10%. We hope we don't see a 40, and we don't a minus 40, and we don't think we're going to see a minus 40, but to come down 10% is not abnormal. I'm not saying it's going to bounce right back. I'm not going to say it's going down 40%. I don't think that's the case either, because earnings are good. We've talked about that. But maybe it's just we were due for this again, and it occurs. I mean, it happens. So I'm not trying to be sanguine over this. We want you guys to know that we're watching this and we're very much on top of this, but we're also want everybody to know not to get too scared. Okay, so that's our October financial planning capital market review with on special Halloween. We hope you enjoy. We hope you enjoy our lightness and not silliness. We'll see you again at the end of November. Come to the holiday party. Let Jen know you're coming. We want to see you there. Have a great day. Thanks. Thank you.